Rights, which is the first IPO from the Indian Railway stable.
And in brokerage calls, firstly, HDFC Securities has reinitiated coverage on GAIL India with a target price of 360. Angel Broking has come out with an initiation note on Shriram Transport with a buy and a target price of 1760. And lastly, Anand Rathi initiates on Greenply with a target price of 280 rupees.
Okay, so we'll be watching out for all these stocks when they open today, but I think we're just 3 minutes away from the market opening. Before that, let's bring in our next guest. Sunil Subramaniam, Managing Director and Chief Executive Officer at Sundaram Mutual Fund, is right here in our studios. Hi Sunil, good morning, and thanks a ton for coming by. Well, the first half is over. I think Nifty is just about up 1.5 to 2% that we've seen in the first half, but it's the broader markets which have been reeling under pressure. So what's been the assessment so far, Sunil, in the first half of this calendar year at least?
I think the impact is of volatility. I think that's the headline story which has been there for the last 6 months and will continue for the next 6 to 12 months. And there's no shying away from this volatility because there are certain fundamental factors, right? So I think the most important factor which is affecting our markets is the November US midterm election. I think nobody has realized that as such significance, that it's that which has driven Trump to up the rhetoric in terms of the tariff wars, even go to bed with North Korea, is because I think the Republican Party, to get back a majority in the houses of Congress will only help him in the later half of his term to execute his plans and strategies. If they lose the majority, he will become a lame duck president, like Obama faced in the second half of his second tenure. So I think that's why he's been ratcheting up the talk. He's trying to get his vote bank in place. So I think till November, you are going to see this happen. And naturally, this will have its implications on dollar, on everything else. That's the first thing. Second is the fact is that oil, because of the Iran, which again is a fallout of the American election, the Iran thing and the Venezuelan problem have led to this oil spike. And while US shale gas majors are laughing all the way to the bank, because above $60, it's profitable for them to make. So they are pumping away to glory and making good money. But I think there is a at one point of time, Trump will have to, he's already talking to Saudi Arabia to tone down that. But oil high is again something which has spoke to the markets. The political scenario domestically, also the Karnataka election was not really a very good result for the BJP government. And the 3 state elections are also more risky than rewarding for the BJP government.
Sunil, just hold on. Bajaj auto sales numbers are out, stronger than anticipated, over 4 lakh units. But I think we're just 43 seconds away from opening.
Yes, so let's quickly get the top trading call from our technical experts. Very quickly, Amit, I'm going to come to you first. One stock on your radar.
Well, HUL would be a buy with a stop of 1600. We are expecting it to rally to 1740.
Okay, so buy on HUL. Richard, what about you?
I would recommend Godrej Industries itself, although I recommended it for short-term positional buy as well. But even from intraday perspective, one can go long. Keeping stop below 640, intraday target would be somewhere around 638.
6 seconds to open. The SGX Nifty is indicating a positive outlook. Let's see what the Nifty as well as the broader markets do. Most of the Asian markets are doing well. Nifty is up 20 points. The Sensex is up almost 100 points. So a strong, decent start as far as our markets are concerned. The Nifty Bank, which couldn't hold on to the gains that it had on Friday, is down in trade. It's down almost 25 points. Let's take a look at the mid cap. The mid cap is up almost 0.3%. The small cap is up almost 0.3%. So that's what's happening on the broader market. Let's bring up the heat map. Tata Steel, as anticipated, the top gainer because of the deal with ThyssenKrupp. Tata Motors, strong set of numbers. Bajaj Auto, strong set of numbers. Maruti, strong set of numbers. So they're all doing well. Infosys continues the good run. Maruti came out with strong set of numbers. Despite an inline set of numbers, M&M is doing well. Now I think the sense of the companies with a red tick are moving up in trade. So Vedanta continues to bleed. NTPC is down in trade. ONGC, ICICI, Bharti Infratel, Grasim, all of them are down in trade. So a lot of metal names among the counters which are falling in trade. Couple of IT names on the top side. Titan continues its good run currently. Bajaj Finance, after a drop on Friday, has managed to inch up in trade. Some of the stocks that we need to focus on, let's put up individually some of the counters that were in news and that probably will move. So strong auto sales numbers coming in from Maruti and Tata Motors, and both of them are reacting positively. Eicher Motor, let's pick them up. It was a weak set of numbers, but it's trading rather flat in trade. The other companies that we want to speak about include the brokerage initiate that has come in. Shriram Transport opens positive, but on the other two counters, it's a slight negative tick that's come in. The other counters that we want to speak about is basically the new order of almost 300 crores that Thermax has got. That's moved up almost 2% in trade. You have counters like Minda Corp, despite Vasage buying stake in the company. Minda Corp is down in trade. And a few more before I toss it on to Navneet. The City is bullish on Sun TV, came out with a buy recommendation. The counter is up almost 1% in trade. And you have a price hike that's come in from Moil this time around, has reacted positively as always, so that one does well. ATF price cut, except for Jet, the other two counters are doing well. Jet of late has been seeing significant amount of pressure. But Navneet, anything you're seeing on the broader side of the market?
Yes, Darshan, a lot of stocks moving around, but I guess Nifty has given up its initial gains that we were seeing on the screen. So Nifty is down almost 18 points below the mark of 10,700. Bank Nifty also seeing cuts of almost 80%. Let me just highlight a couple of gainers first among the constituents of the Nifty 500 index. So Rain Industries is locked in upper circuit with gains of 5%. We highlighted Kitik's Garments in the pre-opening session, so that's opened with gains of 3.5%. And remember, IDBI Bank, that's the one which is in focus. It was up 10% on Friday with some bit of fresh long positions also being built up there. So this morning, after LIC gets the approval from the insurance regulator to raise its stake to almost 51%, that's opening with gains of almost 4 to 5%. Something like GMDC, that's also seen gains in the pre-opening rate. And finally, some respite for Dilip Bilkon, some positive ticks after in the last 8 trading sessions continuously this counter has been reeling under pressure, so up almost 1%. On the losing side, you've got stocks like Kolte Patil. I remember this was up substantially on Friday with gains of 16 to 17%, so some breather for Kolte Patil this morning, down 3%. Vedanta, I think Darshan already highlighted, that's also seeing some bit of cuts, and also something like Idea, that's also down with cuts of 2%. I want to pull up Aditya Birla Fashion and Retail. There was a story in Economic Times where they indicated that the company has signed an agreement with Samara Capital to sell its food and grocery retail business for an enterprise value of almost 4,300. So no major reaction. Remember, it's just source-based information. And also keep an eye on the Adani Ports, because there was a bulk deal which took place last week. And also we got the news that the promoters are looking to deleverage the power business. So Adani Ports this morning has seen a cut off nearly 0.5%. Darshan.
Infosys at a fresh record high. Currently, it's the stock of the day. It's up almost 1.5%. And the other IT companies are now following suit. Wipro and Tech Mahindra are also trading at the day's high. So except for TCS, the other two counters have managed to do well. Z is up at the highest point of the day. UPL is up at the highest point of the day. So that's what I'm spotting currently. Wipro continues to move in much higher. Just a word from a technical analyst before we move. Ruchit, any view on Infosys? What should one do?
Darshan, definitely, if we see this calendar year, then IT has been one of the sector which had shown outperformance, and I think it is only one of the sector which has given positive returns so far. If I see on the Infosys front, yes, it has taken the leadership on this up move on IT, and yet there are no signs of reversal. Even if we see last couple of trading sessions, although the stock is trading at its all-time high, but still volumes are good. So this indicates that even at current levels, good buying is there, buying interest is there in this counter. So I would recommend continue to hold on the long positions if any. Even fresh longs, if anyone wants to build, could be created over here. 1250 should now act as a very strong support base. So at current levels or any kind of minor dips, one should look to buy Infosys, and on the higher side, target should be seen around 1360, 1375.
Many thanks to both Amit and Ruchit for joining us on the show. Sunil, you before the market open, you were saying that there could be volatility in the market because of the November midterm elections that could come in. But till that, what's the strategy that you are following at your fund? Are you holding on to cash? Are you buying mid caps? Are you buying large cap? What sectors are you buying? What stocks are you buying? What's your strategy?
So roughly, if you look at it, I would classify it as a defensive and aggressive portfolio. Okay. So we are at about 60 to 65% defensive and 30 to 35% aggressives. Now, what do I mean by defensives? Defensives are those which are actually justifying the valuation. So actually defensives are high valuation stocks, which, because the track record has been good, are justifying the valuation. So IT is one, auto is another, rural based other consumption themes, consumer durables, retail financials, because auto and consumer durables are all backed by financing as purchases. So these I would consider as defensive sectors in.
So are you adding more on that side?
Yes, we will be adding more on that side. And as far as the aggressives are concerned, these are the cyclicals, the industrials. So there we are adding because we believe the correction has represented a very good buying opportunity. So as a mutual fund portfolio, I will like to add stocks which I'm confident about the future. And I think the correction over the last few months has given us a brilliant opportunity. So we actually added on a lot of cyclicals, which we believe the micro earnings are not impacted by the macro things which is affecting the price.
So by the cyclicals, which type of sectors are you referring to?
So essentially capital goods, basically we see infrastructure as the key driver, because with the government spending likely to sustain during this election year, right, roads, railways and all of those. So EPC contractors, construction equipment suppliers, capital goods, cement. What is the cement is a geographic play. So depending on the geography, where is it play? And then steel we are very bullish on, because I think that feeds into the infra pie.
So and how much percent of your portfolio is currently on cash? How much cash percentage would be cash?
But 3 to 4%.
So basically you're fully deployed in the market at this point of time.
Absolutely.
And what this, you're saying you're aggressive versus defensive, and you're saying you're defensive, these are the high valuation counters. So in this, are you focusing more on the large cap side or the mid cap side? What would the ratio be?
No, you see, we, for example, we think that there are enough defensive plays within mid-cap for us to do. So this is not, when I said 60, 40, 65, 35, I didn't mean large cap versus mid-cap, but even in mid-caps, there are IT mid-cap companies, right? There are...
No, I understand. I was asking, as part of your portfolio, when the mid-caps are down 20%, this is 15%, the small caps are around 20%, I just wanted to know, as part of your portfolio, how much would the new buys that you've done, how much percent of money are you deploying towards mid-cap, and how much are you deploying towards large cap?
Okay, so the reason I
didn't get a sense.
Yeah, I know that, but I'm just saying you can only talk of that of a true diversified fund, right? Because now with the SEBI rationalization scheme, a large cap fund has to be majority in large cap. The wiggle room has gone away. So there's no fund called diversified fund now. There's only multi-cap, which is where you can play. So our multi-cap, we don't have a multi-cap fund. So we have only a large and mid-cap fund which has a 65-35.
So do you think the correction that one has seen in mid-cap was largely going to do with the rejig that the funds had to do after SEBI's new rules?
See, the rejig started from the month of March, April to June, but the correction started well earlier. So the correction was probably enhanced by the sale. It was enhanced by the sale, but we believe we are close to the end of it. I think by June end, I think most funds have been done with their restructuring. So July shouldn't see much more of a fund manager driven impact on the stocks. This is more of a reaction to volatility.
And have you witnessed any redemptions? Also, tell us, how has the money flow been so far?
I think as far as we are concerned, March was a spike because tax saving, right? But otherwise, if you take away March as a thing, Jan, Feb, April, May, June have all been rising trends in equity flows.
Wow.
So we haven't seen any. The March to April there was a drop because March saw a spike because of the.
So that's some positive side. You didn't mention pharma in your defensive list. We've seen some bit of momentum coming back, at least in the last 1 month in the pharma bag.
Okay, so in pharma, we are underweight the benchmark still.
Okay.
We are, however, selectively buying pharma stocks, those which we see good value in. And where we are buying these we have a range of close-ended funds called value funds and emerging small cap funds. And 5-year close-ended funds. So we are picking up pharma where we have a clear company view and which we can hold for a period of 4 to 5 years. Okay. So we believe that it's not yet right time to buy the sector as a whole, but highly stock specific and sector specific, because the rupee depreciation and the regulatory clearances are slightly positive, but still there are headwinds because pharma prices are under regulatory control domestically and internationally, and that's a big headwind. So we wouldn't be yet bullish on that sector as a whole.
Okay, Tata Motors has moved to the highest point of the day, and Eicher is now drifting lower. It's down over 2% in trade. So the news that came out in terms of the auto sales numbers not surprising the street. Sunil, any view on this metal pack? A lot of these metal companies especially the deal with Tata Steel that happened. What's your view overall on the metal space?
So we are fairly bullish on the ferrous metal space. On the non-ferrous metals, we believe it's a more a technical, momentum-driven thing. The reason I differentiate the two is that ferrous metals are closely linked to infra. So there's a demand for steel and iron ore which comes from the infra pack. So there is a strong demand story around the ferrous metals. Right? Whereas on the non-ferrous metals, it's largely a story to with China having to shut down some capacities because they are coming to terms with actually recognizing the environment as a serious concern. Right? Which was unexpected. So I think metal rally, the commodity rally as a whole is true with China. But that's again not a long-term play based on which we can go and pick up. It's a more of tactical play on the non-ferrous part.
First half, Sunil, was, as you also mentioned, was about volatility, and that's not got to do with the Indian markets, but globally as well. Brent price is moving up. We've seen rupee also touching all-time low last week. Going into the second half of this calendar year now, what would be your top investment theme?
The second half of this year, our top investment theme would be a rural-oriented consumption. For the simple reason that there are 3 state elections and a central election building up. So whether it's the central government or whether it's the relevant state governments or whether it's the parties or the candidates, all are going to be spending heavily into the rural economy.
What's the top sector in that? FMCG, autos, or?
No, consumer durables, within which auto comes a play. That's a top pick. Retail financiers who have a good exposure to the rural and semi-urban market. That's number 2. Third is agro-related pesticides and farm chemicals, input chemicals, and those. And within auto also, the tractor, power tiller, those which have a tilt towards that would get a higher.
So you will go with that theme, irrespective. There are stocks in that theme where valuations appear to be slightly on the higher side.
As I mentioned a bit earlier, the higher valuations are actually your defensive bet because the market is giving a valuation because there is a consistency and the market is betting on that. So in times of safety, right, the higher valuation actually gives you safety, whereas it's slightly contrarian, I know what I'm saying. Because whether the drop in the high beta stocks is done or not is not yet clear, right? So I would say bottom fishing, it's not yet time. If you have got conviction on a stock over the long term, you continue buying it through the dips. But from a safety element of the portfolio is the higher valuation, right, which is backed by the earnings season. Not the higher valuation where the earnings have dropped, but still the PE is sticking on. That's not that. What I'm saying is that where there's been a good track record of earnings and where the outlook is also good, naturally the valuations will be high. And I think, but sticking to that is going to give the safety to the portfolio.
Thanks, Sunil. Thank you so much for coming to our studio and giving us your perspective. Always a pleasure to have you around. But we'll take a break on this side. On the other side of the break, we'll discuss the problems faced by the power industry and the possible solutions to it with the Power Pack panel. Power Secretary Ajay Kumar Bhalla, Vinayak Chatterjee of Feedback Infra, and Ashok Khirana of the Association of Power Producers will join us on the show on the other side of the break.